Hey guys, and welcome back to the channel. Today we're going to be going over the 5-minute strategy. Before we do that, I do have to preface the video. This is not financial advice in any way. Please remember that trading comes with a large amount of risk, and anytime you decide to trade, you are solely taking on that responsibility. Never trade money you're not willing to lose. So one other thing before we dive into this 5-minute strategy, please make sure you guys are hitting the subscribe button, make sure you're hitting the like button, and make sure you're dropping some comments down below. Even if they're words of encouragement, it definitely helps my channel out. So now let's go ahead and dive into this. This is going to be for any futures contract. So whether you're trading NQ, YM, GC, SI, CL, any of those, you're going to be able to utilize this strategy. So what is this strategy? You're going to find yourself on the 5-minute chart. So make sure you are on 5-minute. Make sure you're on normal candlesticks. So here's candle. I do have Heikin-Ashi highlighted as well. But for the purpose of the video, we're using the regular 5-minute candlesticks. Also, if you guys need your quick access toolbar, how do you get this? You literally just come to your sidebar. Whatever you want up here, you would star. So long and short positions, they're up there, trend lines, and regular lines. Okay, so let's go ahead and let's talk about how this strategy works. So first things first, you're going to take your line tool and you're going to draw out the first 6:30 a.m. candle, the low, and then you're going to draw out the high of the 5-minute. So here we are. We see that first 5 minutes, the high and the low, and we're waiting for price to break below or above for us to be able to take a position. One thing about this strategy, though, is how do you enter the strategy? How do you get in these trades and get out of these trades? So let's talk about this. I'm going to put this in replay. It's already there. I'm going to select a bar. We're selecting a bar. If you're back testing this, replay mode, selecting your bar, then going down to your 1 minute is going to be the most beneficial because then you're not going to get lost inside of your chart. So now when we look at the strategy, I'm looking for a body below to break below that 5-minute opening range. Would this have faked us out? Yes. It definitely would have. So risk parameters need to be tight when using the strategy. It's still a decent move, around 15 to 18 points, not terrible, but now we see a body break above. Okay, so now we could take our long position. We have a body above our little 5-minute opening range right here, and we can take price up to the upside. How do we figure out where we're potentially going? How do you know, right? Where to potentially take your profit, where to get out of the trade, when to stop. So for me, I will zoom out and I will look for areas of interest. So these are areas where prices come before, where price has made consolidation points. So you can see if we zoom in here, you can see this was a major resistance level. The candles are resisting going higher. Now if we mark this resistance level as well, of course we do have some wicks and a body through, we could mark this as well. So it's anywhere prices come multiple times. So we have those key levels marked, and now we come back to our trade and we see what? That it hit TP1 and TP2. Okay, so 95-point move on NQ. So let's go over another example now. Let's go ahead and let's play price out since we pushed it back in replay mode. And as always, make sure you do your due diligence. Make sure you test these strategies out. Make sure they make sense to what you're doing and your risk management, right? Everybody's individualized, and understanding yourself as a trader is going to be the best thing you can do for yourself to have success with trading. So we can clearly see now we have our 5 minutes already here. So let's go ahead and remove our drawings really quick so we can start fresh. And Again, here's that 6:30 candle, and then where's that 5-minute candle? Here is our 5-minute candle. We're going to mark the high. And where would we have taken the position? Again, we would have taken, or I would have taken the buy position here. So I would have went long here. And again, where am I targeting, right? Again, looking at consolidation points where it could potentially target, or you can trail, or you can set ATM strategies, whatever you see fit for your trading style, not financial advice. So we come back in here, and now let's break this down. Let's come down to a 1 minute as well, so we can kind of really see what price actually did. Oops. Okay. So as we can see, this was a pretty choppy day. And what do we see right at the break? It breaks and it pulls all the way back down. Could this potentially have scared some of you out of the trade? It's definitely a possibility, right? But we're looking for that target 1. Where's the target 1? There it is. Target 1 hit 32 points. So could you have taken profit there? Sure, right? This is why you have to come and back test this and make sure it makes sense to your account, who you are as a trader, and if you would have panic closed that trade. Because had you gotten in here maybe a little bit late, right, you would have only been in drawdown these first few candles, maybe like 6 points, right? Yeah, maybe like 5 points, depending on where you entered, right? And then it came all the way back down and then shot up and hit target 1. Okay, so now let's say that you held the trade, but then what does this do? Come down into drawdown 20 to 25 points, right? So would this have stopped you out? Is this good risk management for you? Or would you have taken profit? And this is where the rules come into place. Take profit, and then if you see another break of a body through, you could say, okay, well, I'm comfortable now. I've taken one trade. I'm looking for another body to break through, and I'm going to take another trade. Okay? It's like ping-ponged. It's stuck here. Okay? Then we see the same thing happen here. Another body breaks. We hit target 1, and boom. So in a matter of, what time was this? Let's say 6:40 to almost 7:40, an hour, you've made 30, 60, 90 points, right? Now, let's see if we see the same thing happen. Again, could you have trailed this if we saw the break above? Potentially, yeah, right? Like, there's a possibility always with that. It depends on who you are, again, as a trader. So what do we see happen here again? We reject again and do the same exact behavior. So multiple trades can be taken out of this. Again, the more trades you take, the less accurate sometimes you are, or the more mentally fatigued you are. So pay attention to that with multiple trades. Could you have been somebody also that just comes in here at the first break and you're like, no, you know what? I'm just going to wait and take it slow, and I feel like price is going to pump today. And you held through all of the nonsense? Sure, there's that option too. However you see fit. But let's talk about drawdown for a second. Do you have enough drawdown in your account to withstand, hypothetically, like a 30-point drawdown? So depending on your account and your account sizing and how you see your trades going, does that work for you? These are all questions to ask yourself when you're testing new strategies. Does it make sense to the type of trader you are, and can you see the trade through without panic closing it or allowing it to go into drawdown and come back potentially, right? So let's go through one more example here, and we're going to talk about London and Asian sessions, and we'll go through a little bit of examples on a few other charts. So let's go ahead and let's look at this trade, for instance. So let's go ahead and remove our drawings, start fresh. We're going to have our line tool. We're going to come up to the high. So we have the high here of that 6:30 a.m. candle. We're going to look for that low of the 5-minute. Here it is, that first 5 minutes. Okay, what do we see? A short, right? pretty clear to see that short position here, and it's a 58-point move. So, or 50-point, depending on where you get in again, right? So do we see anything that tells us where price could be going? Yeah, we have a few areas right here. We see it is resistance, turn support. We see resistance, turn support, key levels, right? Could we continue to mark these as price moves down? Yeah. These are just stair steps. So if you think about stairs, that will help you sometimes too look for areas of interest as well. So let's come back to our initial setup here. That initial break, we can come down to a 1 minute to look for the sniper entry. Let me put that back. Okay. Now let's look and let's make sense of it. Here it was. We have the breakout and we literally just fly into TP1. Fly into TP1. That's 1 whole minute. 35 points. Come down to TP2. 60 to 70 points, depending again on your entry, and you're done, right? This could be 1, 2, 3, 4 minutes of your time and you're done trading for the day, right? If you're 1 trade a day, if that's your rule, that's the rule-based system you have, maybe you're 1 trade a day and you're done for your day and you're moved on and you're good to go. Again, understanding point values is huge. We will be doing a point value video, so make sure you guys are subscribed to the channel so you know when that is coming. Hit the bell icon. So could you again do multiple trades here? Definitely possible, but remembering what I said earlier, accuracy potentially could get in the way. Fear could get in the way. Greed can get in the way. So understanding that those components of trading could potentially start to take place when you take more than 1 trade. We talk a lot about the psychology in our group, but do we finally hit target 3? Yeah, so target 1, 2, and 3 hit. Would this have been way longer than obviously 4 minutes, right? This is where understanding yourself as a trader, again, comes into place. So let's go back to our 5 minute now. Let's reevaluate and look at our trade and kind of how that looks. So nothing ever came close to even buying that day. We were only looking for those shorts. And we saw it push down significantly. Can you stay on a 5 minute? Could you go down to 1 minute for entries and go back to a 5 to watch it? Yes. Could you turn on HA candles? Yes. Why are HA candles so significant? Why do I use them quite a bit? HA candles will let you know when potentially there's a reversal or price is tired. So a lot of people will use HA candles to stay into a trade or to understand where reversals might happen. So we look at it on a 1 minute, we can clearly see that was our first initial trade and then we got the second. So these are something you could utilize as well. We're going to go over to YM now and we're going to look at a few ideas with that same 5 minute. So let's just start here. What day was this? Let's not do a Friday. Let's do this day. And let's go ahead and let's do our 5 minutes and try to make sense of this day. So we have our 6:30 a.m. candle and then we have the 6:35 up here. Okay, we see a wick bounce above, but again, where's the main trade here? And if we jump into replay mode here and we click start new, come down to our 1 minute and we're trying to make sense of this, could we have gotten faked out for this initial body breakdown? Yes. Okay, so either you have tight stops set with this position or with this strategy. I just did that backwards. Short position. Okay. Target 1. And then there could potentially be obviously target 2 here. If we zoom out, do we see that take place? We'd probably have to scroll for a while, but we could just say that this was potentially our area of interest. We can see it's touched here multiple times, had reactions, and we can see that target 140 points. Okay, so let's go back up to a 5-minute, and remember, this is suitable for any market that you're trading. So let's go to another day, and we were going to talk about Asian and London, and we will talk about that. I don't specifically trade Asian session. I find the most volume to be in New York session. Some people do prefer Asian and London, or that's all their schedule allows. So we will look at it, and I will show you how I would utilize this 5-minute strategy still. Okay, so let's go ahead and remove start fresh. We have all the way up here, and then we're going to use the wick low here. Okay, and where do we see this start to short? Here. Could we have taken that short position and got a little bit of maybe green on the table? It's definitely a possibility. What would I have been targeting here though? I potentially would have been targeting all the way down here, or even this first TP. But we do smack right into it, 60 points, okay? Now we see price do similar again, the short position. We break here. What do? Come right back down into that TP1. It's just a consolidation point. It's just a support / resistance level, okay? Now what do we see here? Again, we come back up, we reject out, and then we get the move. There's the volume, the sellers step in, and we're dumping, okay? Here could have been another TP, and then this level here. I wouldn't go and use the low all the time. I will look for more areas where prices had reaction. Does it go to the low? Yeah, it did. Right? But for me, I would use that as my safeguard. Okay? So either 240 points or 295 points. Can we go on a 1-minute and see the same thing? Let's go down to our 1-minute and let's see how we can make sense of this. Okay, so my entry would have been, I needed a body, an actual body, right, below. And sometimes this can give false signals as it did right here and then push down. So you want that full body pushed down, and we finally got it there. Can you go and stay on your 5-minute to make sure that's what you're looking at? Yes. So depending on, you could have potentially got in here, and these could have stopped you out and then got more of a body the third time, but you could have just been done by then because it made you break even, or maybe you took a small loss, right? But the second position sold all the way off, and then the third position clearly sold all the way off. So this first initial one, yes, it could have been a little bit tricky on looking at the 1-minute, but if we go back and we look at the 5-minute, we can see that body and then it push. It's still very wicky, so that is a tough one. I'm not gonna lie, it is a tough one. Could you potentially definitely gotten stopped out? Yes, right? But it did hit the TP, hit the TP. Okay, let's look at another example and make sure that we make sense of this on YM for the strategy. If you don't like trading YM and you trade something else, of course, test the strategy on whatever it is that you like to trade. So we'll do one more example on YM, and then we'll hop over to gold and take a look at it, and then we'll look at the London and Asian sessions here in a second. Okay, so let's go ahead, remove everything. We have a very wide opening range for those first few minutes. We see a long position here. We can go ahead and take our long. Again, where are we targeting? We could say that we are targeting these highs because price had reaction there. We zoom all the way out. Has price come there before and had reactions? Yes, right? Support turned resistance multiple times. Okay, we come in here and we look at this. So initially, is there another area that this potentially could have had reaction? So let's zoom in here for a second, and we could potentially mark this level. And we can see across the board that it is a significant level. And now we come in here and we look at this and we say, okay, well, that makes sense, right? TP1, 90 points. We see it reject all the way back down. Could this either be something, again, you just hold to the full TP of 250 points, or could it be you take your profit at the first TP and then you see it holding this level and you're like, you know what, I'm going to go long again. And you take a second long position and you just see price push all the way through to TP2. Could it go higher? Right. Obviously, this is already a few hours into market open. Let's go ahead and play it and let's see what happened. So could you have held this and gotten a little bit more out of it? It's a possibility, but it's just choppy, right? Just choppy. But for the 5-minute strategy, it works beautifully. Okay, let's talk about Asian session and London session fairly quickly here. We're going to go through this and try to understand how this works. Remember, I'm Pacific Standard Time, so I'm using 1700 as my area of interest when I am looking for Asian session buys and sells. I would take my 1700 candle and I would do the same exact thing. So, excuse me, I would come in here and I would find the high of 1700 and the low of the 1705, and I would mark. And then we see the sell, okay? Everybody can see that. Again, you can drop down to the 1 minute or stay on a 5-minute. Again, where are we targeting? Areas of interest, price targets, 100 points there. It's a consolidation point. Or here. Consolidation point again. Tap into it, 224 points. Okay. London session is going to look a little bit different. For me, it would be 2 a.m. So I would be looking at that 2 a.m. candle. So Asian session, 1700. London session, 2 a.m. So find the 2 a.m. candle, the high of the 2 a.m. I know I just switched. Let's delete this. So here's 2 a.m. high, and then the low of the 2 a.m. to 205 here. So we're looking for anything above or below. Beautiful move. Have a nice long position. Again, where would my first target be? A consolidation point here. Okay, we hit that beautifully. Where would my second area be? Probably up here. So then again, tapped right into it, 200 points. Again, we could look at 1700. Let's look at here's 1700 and then 1705. Could you have taken the short? Yes. Could you have probably taken some money off the table? Definitely a possibility for the short here. But where was the big play? It was the long position, as you can clearly see. So not a great move for short, 17-ish points, but then we see longs come in. So I would go long above and then targeting first consolidation and then second consolidation potentially. And then is there room for third? Yes, there's third. Comes all the way over. This is a very long trade to hold. This is literally holding all night into the morning hours. So that's that. Now let's go take a look at gold. So we're going to remove everything off of gold that I have drawn. We're going to come back to normal candlesticks. We're going to make sure we're on a 5-minute, And then we're going to look for that same behavior. So we're going to take our line tool. We're marking out that first 5 minutes. Again, you can choose to do body to body or wick to wick where the line goes. So that's that first 5-minute candle. The high is way up here. What do we see happen? We see the sell-off. 20 points. Very significant if you're trading gold. One full-size contract, $240. Okay, let's look at the same thing here. I just said $240 if you're trading a micro. Sorry, if you're trading full size, it is $2,400. Okay, so now we mark out our first candle high and low. There's the 5-minute. And then now we're looking for a body above. Could we have gotten faked out here? Yes, but then what do we see happen? The push up. So again, remembering that every time's not going to be perfect. Again, where are we targeting? First target would have potentially been this level here. Second target is above here at this area. And then above that would be here. So you can see how this starts to play out. This first initial trade, we can just put a long position so we can see what that looks like. If you're trading micro, $10 per contract. It does come and hit that. That's $72. If you're trading a full size contract, though, that it moves at $100 per point, you just made $700. Okay. So yes, there is the space for it, but remember how gold moves. It's a lot different than YM and NQ. The points are going to be a lot different. So we can see now the second position obviously was more significant. Again, to TP1, it's going to be that 7-ish points. We blew right through it. TP2, 21 points. So you're looking at $210 or $2,000. And then again, $300 or $3,000, depending. Do we have targets above here? Yes, we just didn't mark them. Okay. Let's go look at another example. We're going to do our same thing here. And we're going to mark our low. And then we're going to mark our wick high. And where do we finally see price break? Could this have faked us out? Definitely a possibility, right? How do we mitigate this? So let's go to replay mode, start new. Let's come back here and let's understand looking at this on the 1 minute. And let's see what this looks like. Do we have targets? Yeah, we have plenty of targets. Okay, so let's kind of zoom in here and let's understand what these targets look like and how we can utilize them. So looking across the board, I would use this as a key area just because it's the next consolidation point above our area of interest. And then for gold, I do like to keep the zones a little bit tighter. And as you can see on a macro level, meaning on a 1 minute, you can see those play out. Okay. And you're just looking for where price is stacked out, stuttered, stacked out, whatever terminology you want to use. Okay, now let's go back to our trade. And let's zoom in here to make this make sense. Okay, so this was the on the 5 minute. Let me go back to the 5 minute so I can refresh your memory really quick. Okay, remember that I said this could potentially have faked us out, but let's look at the 1 minute. This is the body above. I would have went long. And I would have looked for my first target, which was what? This zone. right? This area. 7 points, 8 points, right? Definitely wicked like crazy. So we'll talk about that too here in a second. I know this video is getting a little bit long, but I wanted to show you guys in detail what this looks like, because it's not as simple as just saying, oh, look for the breakout, right? It's never that simple. 1 minute on gold tends to fake. I would go probably more with a 2 minute, in all honesty, for myself, right? Not financial advice. So again, we have a break above 2 minute. So I would take a long position, and it gives me the same kind of risk parameters, because I'm looking for it to pump above, right? I'm looking for the pump above. We could have said that this was another area that we could have taken a long from too. Maybe you took the long to TP1, got stopped out, reversed, and then it does it again. So this could have been, we'll just do this. Depending if you want multiple trades, like these are multiple scalping positions, okay? So there's another opportunity. One, we could just say these are 10 points, right? Yeah, they're all about 10 points. You get realistically 10 points. So 10 points, 10 points, another 10-point move. And then do we see it happen again, right? So let's go and watch this. Yeah, it happens again, right? So we have another break above with a body. Could you have taken this potentially and got stopped out? Yeah. We don't have a body. There's no bodies, then there's a body above. Could you have taken a long position there and got stopped out? Yes. Could it have just been 3 points and you closed it because you trailed it? Possibly, right? Okay, we kind of see a body, then that next immediate candle's red. So we're kind of waiting here. And we say, okay, there's another one. Boom, right? So let's go look at another example. And individual names, this could potentially work the same. As far as London session, this works probably very beautifully. Gold is something that, in my opinion, over the last 6 years of trading, gold moves pretty nicely in Asian session. A lot of people trade gold in Asian session. So could you have traded the 17 to 1705 here? Let's just look at it since we're here. Let's make sense of all of this. So here's that low of the 17. There's our 1705 candle. Here is the high. So we're looking for a break. There's the break. So that was our initial short position right here. Again, where are we targeting? Consolidation points. So we could have said this was a major consolidation point looking here. And we tap into it. Could we have moved this up some and said the high of these consolidations? Sure, right? The high or the low of them, you can mark both of them if you choose to, right? You could mark both of these and say, okay, if it gets to the next one, right? Or you can move your stop loss below here, but that's a pretty significant move. That's 40 points on gold. That's pretty good. Considering, you know, every point is $100 or $10. That's a pretty nice move. Okay, what do we see again happen here? Another short position. So we could take the short here, and what do we see happen here? We break down and we go to what? That second consolidation TP moment, right? So that's what? 58 points there. Again, $5,800 with one full-size contract of gold, or $580 if you're trading a micro. Okay, let's look at the 5-minute New York. Let's mark our areas. Here is that high. Here is the 5-minute low, is going to be a very wide opening range. So let me delete this because it's in our, hold on. Don't get yourself confused like I just did. Make sure you have your chart cleared if you start getting mixed up with these. Okay, so there's our 6:30 a.m. candle, 6:35, high, low. What are we looking for? Our break. Okay, what do we have? A beautiful break position. Short position, here we go. That's a huge move, right? That's a very significant move. Where are we targeting? How do we know it's going to go down there? Or why would we be looking down there? Because we have this consolidation point that has been a significant level, right? Could we go below that, right? Remembering that these are tight. They're going to be tight levels. What do we see? Okay. TP1 and 2 hit. Does it go below that? It sure does, right? So could we mark more of these? Yeah, where would that next level be? For me, it'd probably be right in here where I see the most reaction, okay? Could you go lower? Yeah, you could, okay? My next level would be right here. What do we see price do? Come all the way down, okay? 73 points. So 73 points, 7,300 or $730. Keep in mind this trade took how long, right? And that's the other thing. If you're scalping sometimes, some of those moves happen in 3 to 4 minutes. Sometimes these are 5 minutes, remember? So 5, 10, 15 minutes or so in a trade. So opening yourself up to the idea that you are potentially sitting in a trade for 5 minutes. You are potentially sitting in a trade for 15 minutes. You are potentially sitting in a trade for 30 minutes, right? So let's look at this day. Could this day been a little bit difficult? 100%. So let's look at the high. Let's look at the low. This is our 5 minute. Okay. What do we see happening? A lot of just nonsense, right? And then finally get the body above. We take our long position. Where would I have been targeting? I probably would have targeted this high on the bodies. Oops, not what I meant to grab. Okay. Probably would have been targeting this high. It gets really close. Let's see if there's any other indication of that this is a significant area. I mean, yeah. Okay. Would I potentially have brought it down some? It's definitely a possibility, but I probably more likely would have just kept that. Oops. Control-Z. So, definitely a possibility. Okay. Again, London session we didn't really go over. We can go over it. Let's go over, again, the 1700. Let's see how it works out. Here's 1700. Okay, 1700, 1705. We mark it out. What do we see? A rally. You would take in longs. Again, looking for price targets. Did we have price targets? We sure did. Tapped right into it. Where I would have potentially put in an area. There we go. Boom. 30 points. Okay. Let's go into London session really quick and understand that on gold. Remembering that the key components for gold is going to be the 5 minute and the 2 minute, and looking at the 1700 for Asian session, 17 to 1705. The London session is 2 a.m. to 2:05, remembering on Pacific Standard Time, and again coming down to the 2 minute if need be, and the New York session we already know. Okay, so we're going to be looking at the 2 a.m. to the 2:05. So here is our 2 a.m. and 2:05, and we're going to mark the high, the low. Okay, let's mark both those. We have a short position if you're up at this hour and this is what you see yourself trading. By all means, do it, right? Okay, we see the short position. There was a beautiful short position around 30 to 40 points depending on where you get in. Let me delete this because it's gonna throw somebody off. Okay, so now here again is our 2 to 2:05. We see this as the high. What does it do? Break above. Could we take a long position here? Yes. Okay, where are we targeting again? We could potentially target this first high here. So we would mark this first high. we tap right into it, and that would have been a 28-point move. Where's the next high? And how do we find it? Well, again, we look back and we look at these areas. It's where previous level was, which is interesting when you start to come in here and backtest these levels. So the thing about some of these levels sometimes is that they'll get really close to it and then reject. So you can see that it's really, really close there. But 75 points, that is a crazy move for gold. And remind yourself that this is happening at 3 in the morning. Okay, so I think we have the 5-minute strategy nailed down. Can it happen with silver? Yes, it's the same thing. So we can come in here, we can go to our 5-minute chart, and we can look at this. So let's come in here and let's mark the same things we were just looking at. By now, everybody has this ingrained in their head, 5 to, oh my gosh, 6:30 to the 6:05, or 6:35, excuse me, and then the break below. So this is that same move that happened on gold. Remember where I said it potentially could fake you out? Silver definitely moves a lot different. I would say do your due diligence with silver and make sure you know exactly what you're getting yourself into with trading silver. A 30-cent move is incredible. Trading one full-size contract, that's around $1,500. And then a dollar move, it's going to be $1,000 or $5,000, excuse me. So let's go ahead and remove my drawings and let's come in here and let's do this again and make sense of this. So here's our 6:30 candle. We're marking our high. Where's our 5-minute? It's down here with the wick. Okay. We don't get a break until 7:20. So we're waiting on the charts to get a break. You can set alerts for yourself if you're using TradingView. You can come over here, hit the little plus button, and you can click add alert. It's not letting me because I'm in replay mode. So just remember that's how you do it. This is a 85-cent move. So this is a pretty significant move as well on gold. At 50 cents, you're at $2,500 with a full-size contract. If you're trading micros, instead of being $25 a tick, it is $5 a tick. So now let's look and see if we see another opportunity. This is a great place again for Asian and London session. Metals do like to move during this time pretty nicely. There are a lot of people trading in this time as well. So let's go ahead and let's mark the 1700 to the 1705. 1705 is right here, but our low for that 1700 candle is very large. So we would be waiting again for our breakout. We finally get our breakout and it moves down to around a 50-cent move. And remember that 50-cent move is on one full-size contract, $2,500. So let's go ahead and remove our drawings really quick. Let's do a 5-minute here. Okay, 6:30. And then here's our 6:05 candle. Oh my gosh, 6:35. And then what do we see happen? A break above. We get a pullback. So again, anytime you're on a metals chart or anytime I am on a metals chart, I'm using a 1-minute and 2-minute, primarily the 2-minute because the 1-minute does like to show fake outs. So even if we did take this long position, would you have potentially panic closed this? Depending on your drawdown. So you're not even 10 cents in drawdown, and with a full-size contract, 10 cents is around $500. So remember that 10 cents in order to make, and then we see this obviously rally pretty significantly, you're risking $500 to make $2,500, trading full size, of course. This is something that you would have to really do your due diligence with trading silver. It is not for the faint of heart. Okay. So again, if I was trading during London and I wanted to do the 2 a.m., right? Here's our 2:05 to 2 a.m. I would look for those same key components. We see the break. We see a buy, and then also what do we see? Significant sell. The sell comes in not until 5 a.m. So 5 a.m., you could wait and then just take the short. And it's over $1 move, so you're looking at over a $5,000 move. Okay, let's come on here. Let's look at this. Let me remove these so we can see. 630, 635. Let's mark these. What do we see happen? We would have potentially went short. So I would have taken my short position here, targeting probably around 30 cents. We hit 30 cents beautifully. Could you have done this again? Well, let's come in here. Let's select a bar and let's go down to our 2-minute and let's look at it. So here's a 30-cent move, $1,500 a full-size contract. Could you do the same thing again? Right? I'm on a 2-minute, right? So here's my 2-minute, my body break. And where do we hit? 60 cents. Why, how and why, right? Those are always the questions. Why are you taking the move? If you don't know why you're taking the move or why you're getting into the trade, you're doing yourself a disservice. You have to understand where and why price is going there. So now that I do that, do you know why? Right? Asking, now do I see it? Do I understand like, oh, okay, that makes sense, right? Is it something that you can trail? Metals move a lot different, so you'll have to make that assumption by yourself. Me personally, again, not financial advice, I don't trail metals. I come up with point values that I see fit with marking my charts. Sometimes I will move my stop into profit so I can capitalize on the movement, but I don't necessarily trail these. Okay, let's go over one more example and then we'll be done with the 5-minute strategy. If you guys have hung out this long, thank you guys for watching the video. And again, make sure you're hitting the like button, commenting, and then also hitting the bell icon so you guys know when I upload new videos. So here's our 630, here's our 635. It's kind of ugly here, but what do we see? Immediately a buy. So we would, again, we could come down and we could do what? Come to our 2-minute chart. Remembering metals, 2 minutes. If we're looking at NQYM, ES, I'm on a 1 minute. What do we see here? A 67 cent. These are in cents. We'd probably have to scroll out quite a ways to figure that out. This was a really flat London session, so the moves would have been kind of just crummy. 1700 to 1705. We can clearly see that on a 2-minute even if we were to mark these on a 2-minute, all right, and just say, okay, I can see that it's in this consolidation, finally breaks. An hour in. Kind of holds here, doesn't really move, and then has its big move. Okay, same thing here. 6:30 a.m. candle. Oh my goodness. Bring it up to, is this our 5 up here? Oh, I guess it would have to be down here. So this is on a 2-minute, so it's a little bit harder, but understanding that that is our long position. Again, doing your due diligence, understanding point values and how this potentially moves. What's the most consistent move, right? What is the most consistent point value that repeats itself on a daily basis that you can retrieve from the market daily? Okay, there's the first move, 30 cents. Second move, more significant, right? What do? Come to that first consolidation point. How many cents is that? 68 cents, right? Anything over 50 cents, we know that that is over a $2,500 move, trading one full-size contract. So I'll leave this here. Let me know if you guys have any questions down in the comments. This is the 5-minute strategy. It can be used on any number of charts that you see fit. I have not tested it on individual names. If that's something you guys want to go over, we can potentially go over that. I know that a lot of a lot of people have been trading individual names and potentially want to look at that. So again, doing your due diligence and understanding that there is potential to be able to do that. Remember, with individual names, make sure that you potentially have the correct market hours on. If you want extended hours to show London and Asian session, you have to go to the extended trading hours over here in the bottom right corner. Reset our chart view. This just makes it a little bit more simple for me to see. So again, we can come in and we can do the same behavior for individual names, looking at the 630 to the 635 candle and adjusting all of these. That is not what we wanted. Adjusting these all to make sense and see where the trade happens. So not until later, way later in the day. Let's try another opportunity and see if it gives us better results. Again, here's our 630 candle. We have a very strong wick to the bottom side, and then we have our 5-minute candle way down here. So we mark that, and then we get a break. So we could go long here. And then that first consolidation point, or the second consolidation point, which would be up here. So it works similarly for every market. Again, there's your first position, second position takes off and goes. Can this be used now with BTC? Let's go see. BTC, USD, we'll use Coinbase, and let's remove our drawings. We're on our 5-minute. Let's go back and let's look at Bitcoin and let's see. So again, the same behaviors. Here is the 630 candle, 635 wicks down. Here's the body above. Okay. We see a wick, but then we see the body explode up, comes and messes around, and then makes the final move all the way up. Can we see the same thing over here? Here's our 630, 635. So we hold tight in these parameters. We see a first initial short and then a second with significance. And it sells, continues to sell off and holds the line, okay? Let's look down here. And let's say there's our first and second candle. First candle. Messes around and then finally makes the move up. So we could have caught a significant move here on Bitcoin, right? But I might make a separate video as well on Bitcoin. Please let me know in the comments if you guys have interest in learning about crypto and trading Bitcoin and how you can utilize it to its fullest advantage. So again, 630 candle, 605 candle. Oh my gosh, 635. Goodness. We get wicks and then we finally get bodies, and we have a very significant move to the upside. Very large move. Again, that took over an hour, so remember that when looking at these trades. Okay, this is going to be very significant. We can already see that, right? And the more you do this, the more your eyes get trained to be able to do this. So we're going to go wick to wick. Here's our wick to wick. What do we see? How do we know, though? We look left. We'd have to look left a ways because of obviously what Bitcoin's been doing. If anybody has been watching Bitcoin, we were up and then we sold completely down. So we'd have to look left quite a ways. Is it still doable? Yes, you just go to a higher time frame and look for price structure. So let's go back, trying to find, okay. This might be a little bit easier to see as far as price structure goes. Okay, this obviously we can already see from watching this video. Hopefully the whole time you're still watching, and we see the break. Where's areas of interest, right? 1, TP2, TP3. And then what do we have happen? So we would go long. So TP1, TP2, TP3, boom, hit. So like I said, if you guys have questions, let me know in the comments, but you can do this on primarily almost every market as long as you see it. If you don't see it, then the strategy may not be for you.